Hello, Verity traders. This is our daily market recap. Let's see what happened in the markets. All right. In the news, everybody knows US stocks plunging to new 2026 lows. Why? Again, CapEx. AI CapEx, capital expenditure for AI is the biggest fear. We also have weak data that triggered this tech-led fall. Now, the Nasdaq futures extended their losses after hours because of Amazon. They reported earnings after the bell and went down 11% again on 200 billion AI spending outlook. Apparently, this AI spending is really concerning for the markets. The US jobless claim jumped to 231,000. This is the highest level since 2009. But to be honest, we've seen this kind of numbers in the past, like 222, 227. It's not much higher than what was expected. But apparently, when the market is scared about something, they add more fears and it keeps moving lower. Bitcoin plunged roughly 13%. We have this crypto sell-off, and even the metal sell-off looked like it stabilized, but metals keep moving lower. The uptick was just in the small caps. Russell futures edge higher, and this shows resilience despite this broad risk-off sentiment. We have 24% of stock advancing and 72% of stocks declining. So we're seeing like a deterioration in the market with almost a 50-50 situation on stocks above and below the 50 SMA. We'll see how this develops. Now, if we look at the charts, we have our Qs, the Nasdaq really down, start moving lower, one higher volume. This is a bit concerning. We'll see with this level of support if it's going to break it, continue lower, or it's going to have a bounce. Fridays are always a bit concerning when the market is moving down, but let's see if it has a bounce. The S&P situation is pretty similar. We have broken down the 20 SMA, the 50 SMA. But again, we're at this level of support. We'll see if there's going to be a bounce or going to keep moving lower. Volume is pretty high. So let's see how this develops. This obviously is reflected in the broad market. We see the biggest red is in tech sector, consumer cyclical with Amazon now. So everything that is related to AI is taking a hit. Everything. Obviously with the jobless concern, also the financial is going down. Energy took a hit, basic materials took a hit because of the metals moving down, and consumer defense everything holding strong. Industrial was a mixed bag. The utilities, it looks like they're consolidating, and let's see if they move higher. The rest of the healthcare didn't do bad. So again, we have a lot of weakness in the tech sector, chip, software, AI related stocks, but we have some kind of strength in the more defensive sectors. But again, this is the time to be more defensive than offensive. So if you just want to sit on the sideline and watch how the situation develops instead of trading, that would be the best course of action. At least that's what I would do. Now, we got, as I said, the unemployment claims that rose to 231,000. It's not a big miss, but still it's higher than expected, and a lower job openings. We'll see today on preliminary consumer sentiment and inflation expectations, what numbers they come out, if they're gonna ignite a bounce or not. Nobody knows. We'll see how it goes. Now, our list of stocks to watch. Obviously, we have little bulls. Coca-Cola and Pepsi looks they're untouched by the market moving lower. They're just having a run. And on the bear side, it's mostly AI and tech related companies. You can have a look at these stocks. Again, this is not financial advice. Take responsibility for the trades that you make, but you can add them to your watch list and have a look at them. Obviously, they're performing the way they were performing.